Is the world's reserve currency about to change? For decades, the US dollar has reigned supreme, but a new alliance is asking what comes next. In this video, we'll uncover the historical journey that made the dollar the global standard and explore how the BRICS nations are pushing for alternatives. We'll look at the Bretton Woods Agreement and the economic shifts that cemented the dollar's power, then analyze the BRICS strategy for de-dollarization and its potential impact. If you find this deep dive into global finance helpful, consider subscribing for weekly breakdowns of complex economic news. And let us know in the comments what's your biggest question about the future of currency. For nearly 80 years, the US dollar has been the undisputed king of global finance. Think of it like the most popular kid in school. Everyone wants to trade with them, hold their notes, and use their locker. This dominance wasn't accidental. It was largely cemented in 1944 at the Bretton Woods Conference. After World War II, a new global economic order was needed. Representatives from 44 allied nations met and agreed to peg their currencies to the US dollar, which in turn was backed by gold. This created stability and made international trade much smoother, with the dollar acting as the universal currency, the ultimate medium of exchange. It was a clever system that positioned the U.S. as the world's banker. This is educational content, not financial advice. Is the world's reserve currency about to change? This question looms large as a new economic bloc. The BRICS nations, Brazil, Russia, India, China, and South Africa, emerges as a significant force. Together, these countries represent a substantial portion of the global population and a growing share of its economic output. For instance, in 2022, their combined GDP accounted for approximately 25.6% of global GDP, according to the International Monetary Fund. This collective economic might is fueled by a shared interest in reshaping the international financial order. Historically, the rise and fall of economic empires often coincide with shifts in dominant currencies, much like the transition from the British pound to the US dollar after World War II. The BRICS are actively seeking to reduce their reliance on the US dollar for international trade and finance, a process often referred to as de-dollarization. What drives this ambition? One key motivation is to gain greater autonomy in financial decision-making and to insulate their economies from the direct influence of US monetary policy. Consider the impact of sanctions. A nation heavily reliant on dollar-denominated trade can find itself economically isolated. The BRICS aim to build alternative payment systems and promote trade in their own currencies. However, this path is not without its hurdles. Establishing a credible and widely accepted alternative reserve currency requires immense trust, deep financial markets, and stable economic policies, challenges that even developed nations struggle to overcome. Is the world's reserve currency about to change? For decades, the US dollar has held an unparalleled position in global finance, a status built on trust and the vast economic power of the United States. Yet a significant shift may be underway, driven by the evolving economic landscape and the collective aspirations of nations like Brazil, Russia, India, China, and South Africa, collectively known as BRICS. What prompts these nations to seek alternatives to dollar dominance? A primary concern revolves around the perceived vulnerabilities stemming from U.S. monetary policy. Fluctuations in the dollar's value influenced by American economic decisions can create instability for countries heavily reliant on it for international trade and reserves. Consider the historical precedent. The British pound sterling, once the world's dominant currency, gradually ceded its position as Britain's global influence waned. Furthermore, geopolitical risks play a crucial role. Sanctions and trade disputes can weaponize the dollar's dominance, impacting nations not directly involved in the conflict. The BRICS nations, therefore, are motivated by a desire for greater economic sovereignty, aiming to insulate themselves from external pressures and secure more control over their own economic destinies. This pursuit is not just about trade, it's about building a more resilient global financial system. Is the world's reserve currency about to change? For decades, the US dollar has held a dominant position, a cornerstone of global finance. However, the increasing use of financial sanctions by the United States has prompted a significant shift in thinking among major economies. Consider the historical parallels. Just as empires rise and fall, so too do dominant currencies. The British pound once served as the world's primary reserve currency, a role it ceded after World War II. This trend suggests that no currency's dominance is permanent. The BRICS nations, Brazil, Russia, India, China, and South Africa, are actively seeking alternatives to dollar-denominated trade. Their motivation stems from a desire to insulate their economies from U.S. financial policies and sanctions, as seen with Russia's exclusion from the SWIFT messaging system following its invasion of Ukraine. This move, according to the Peterson Institute for International Economics, can disrupt global supply chains and increase costs for consumers. These nations are exploring mechanisms like bilateral trade agreements in local currencies and the potential development of a BRICS currency. While the challenges are substantial, including coordinating monetary policies and establishing trust, the collective economic weight of the BRICS bloc makes these efforts noteworthy. Is the world's reserve currency on the cusp of a significant shift? For decades, the U.S. dollar has held a dominant position in global finance. However, a growing movement among BRICS nations, Brazil, Russia, India, China, and South Africa, is exploring alternatives. Consider the historical precedent. Just as empires rise and fall, so too do dominant currencies. The British pound once held sway before the dollar ascended. Now, BRICS countries are increasingly looking to conduct bilateral trade using their own national currencies. This strategy aims to reduce reliance on the U.S. dollar, thereby mitigating risks associated with U.S. monetary policy and sanctions. A prime example is the agreement between China and Brazil, which saw significant trade settled in their respective currencies in 2023, surpassing previous records. What makes these agreements possible? Advances in financial technology and the establishment of cross-border payment systems are crucial facilitators. These mechanisms bypass traditional dollar-centric channels, allowing for more direct currency exchange. But what are the motivations behind this de-dollarization push? BRICS nations cite a desire for greater financial autonomy and a more multipolar global economic order. They also point to the volatility and inflation experienced in economies heavily reliant on dollar-denominated assets. This strategic realignment could have profound implications. Could this create new investment opportunities or impact the cost of imported goods for consumers worldwide? Is the world's reserve currency about to change? For decades, the U.S. dollar has held a dominant position in international trade and finance. But a significant shift may be underway, driven by the BRICS alliance, Brazil, Russia, India, China, and South Africa. These nations are actively exploring and developing independent payment and settlement systems, aiming to reduce their reliance on dollar-dominated infrastructure. Consider the historical precedent, the decline of the British pound as the dominant global currency in the early 20th century. Such transitions, while gradual, can reshape the global economic landscape. What are the core motivations behind the BRICS push for de-dollarization? Primarily, it's about enhancing economic sovereignty and mitigating risks associated with U.S. monetary policy and sanctions. The BRICS are not just talking, they are building. China's cross-border interbank payment system, CIPS for instance, offers an alternative to SWIFT for yuan-denominated transactions. Russia has also been developing its system for transfer of financial messages, SPFS. Could these nascent systems truly challenge the established order? The challenges are substantial. For alternative payment systems to gain widespread adoption, they need to demonstrate robust security, efficiency, and broad acceptance. Furthermore, the liquidity and deep financial markets associated with the U.S. dollar are not easily replicated. Will these efforts lead to a multipolar currency system, or will the dollar's entrenched position prove too formidable to dislodge? The answer will have profound implications for global trade and individual financial well-being. Is the world's reserve currency about to change? For decades, the U.S. dollar has reigned supreme, a constant in global finance. But a new challenger is emerging, and it's speaking with a unified voice. The BRICS nations, Brazil, Russia, India, China, and South Africa, are actively exploring ways to reduce their reliance on the dollar in international trade. Consider this. China, the largest economy within BRICS, has been steadily promoting the international use of its currency, the yuan, also known as the renminbi. This isn't a sudden development. For years, China has been encouraging its businesses to settle trade deals in yuan, a strategy that has seen its share of global payments grow. According to SWIFT data, the yuan's share in global payments, while still modest compared to the dollar, has seen an upward trend. What's driving this shift? The BRICS nations cite a desire for greater financial autonomy and a response to what they perceive as the politicization of dollar-denominated financial systems. It's a move reminiscent of historical power shifts. Empires and their currencies rise and fall. Think of the British pound sterling's dominance before World War II, eventually giving way to the dollar. However, the path for the yuan is not without its hurdles. Capital controls, a less than fully free-floating exchange rate, and the need for greater transparency are significant challenges. Can the yuan truly unseat the dollar without addressing these fundamental issues? The answer remains to be seen, but the conversation is undeniably underway. Is the world's primary reserve currency on the cusp of change? For decades, the US dollar has held a dominant position, a status akin to the British pound sterling in its heyday. But as economic power shifts, so too can the currencies that underpin global trade. The BRICS nations, Brazil, Russia, India, China, and South Africa, are exploring ways to reduce their reliance on the US dollar. This isn't about a sudden overthrow, but rather a gradual shift, much like the transition from one global hegemon to another throughout history. Consider the Dutch guilder in the 17th century, or the aforementioned British pound. What are the specific motivations behind this de-dollarization effort? For many BRICS members, it stems from a desire for greater economic sovereignty and a hedge against perceived U.S. monetary policy risks. China, for instance, has been actively promoting the international use of its renminbi. However, the path to global acceptance is fraught with challenges. Could alternative currencies, perhaps even a basket of BRICS currencies, gain significant traction? For a currency to become a true reserve asset, it needs deep, liquid financial markets, a stable political and economic environment, and widespread acceptance in international trade and finance. For example, the dollar's dominance is supported by the sheer volume of transactions in U.S. Treasury markets, a level that is currently unmatched. Furthermore, regional currency initiatives are also on the table. These could involve bilateral trade agreements settled in local currencies or more complex multilateral arrangements. However, achieving the scale and trust necessary for these to rival the dollar on a global stage presents a formidable hurdle. The success of such endeavors hinges on sustained cooperation and significant economic reforms within the BRICS bloc. Is the world's reserve currency about to change? For decades, the US dollar has held an unparalleled position in global finance. But a growing alliance of nations, known as BRICS, is exploring alternatives. The BRICS bloc, comprising Brazil, Russia, India, China, and South Africa, along with new members, aims to reduce reliance on the US dollar. Their motivation stems from a desire for greater financial autonomy and to mitigate perceived risks associated with dollar dominance, such as the impact of US sanctions. However, a significant hurdle for BRICS currencies is market liquidity and convertibility. Unlike the US dollar, which can be traded freely and in vast quantities across global markets, many BRICS currencies face limitations. For instance, while China has made strides with the renminbi, full convertibility and deep, liquid markets are still developing. This lack of seamless global exchangeability makes widespread adoption challenging. Consider the historical parallels. The British pound once dominated global trade, much like the dollar does today. Yet shifts in economic power and evolving global dynamics eventually led to its decline. Could a similar transition be underway? The ability to easily convert one currency to another and the sheer volume available for trading is crucial for international trade and investment. Without these characteristics, a currency struggles to gain traction as a primary reserve asset. This is a challenge the BRICS nations are actively working to overcome. Is the world's reserve currency about to change? For decades, the US dollar has held a dominant position, a cornerstone of global trade and finance. But as the BRICS nations, Brazil, Russia, India, China, and South Africa increasingly explore alternatives, this long-standing order faces potential disruption. Consider the historical precedent. The British pound sterling once served as the world's primary reserve currency, a role it gradually ceded to the dollar after World War II. This shift wasn't instantaneous, but rather a decades-long process, influenced by economic power, global events, and the establishment of new financial institutions. The BRICS nations' motivations are multifaceted. They seek greater financial autonomy, reduced vulnerability to sanctions, and a more equitable representation in global economic governance. China, in particular, aims to internationalize the renminbi, making it a more significant player in cross-border transactions. However, the path to de-dollarization is fraught with challenges. Established financial networks, deeply intertwined with dollar-denominated assets and transactions, represent a formidable barrier. Furthermore, the sheer liquidity and stability of U.S. Treasury markets, for example, are difficult to replicate. What are the implications if these efforts gain traction? A significant shift away from the dollar could impact global interest rates, currency exchange rates, and the cost of goods for consumers worldwide. Is the world's reserve currency about to change? This question looms large as the BRICS economic bloc has recently expanded, welcoming new members. The inclusion of nations like Iran, Saudi Arabia, and the United Arab Emirates significantly alters the group's collective economic weight. For instance, the original BRICS members accounted for roughly 40% of the global population and 25% of global GDP. With the new additions, these figures are set to increase, potentially reshaping global trade dynamics. What drives this expansion, and what does it signal for the future of international finance? Historically, economic power has shifted. Think of the transition from the British pound's dominance to the US dollar's ascendancy after World War II. BRICS nations are motivated by a desire for greater influence and a reduced reliance on Western-dominated financial institutions. They are actively pursuing strategies for de-dollarization, aiming to conduct more trade in their own currencies. However, this path is not without its hurdles. Challenges include coordinating economic policies among diverse nations and establishing robust alternative financial infrastructure. Consider the complexities of creating a new reserve currency. It requires widespread trust and acceptance, much like the US dollar achieved through decades of global economic leadership. The success of these de-dollarization efforts could have profound implications, potentially influencing inflation rates and the accessibility of investment opportunities for individuals worldwide. Is the world's reserve currency about to change? The expansion of the BRICS alliance, now including nations like Saudi Arabia and Iran, signals a significant shift in global economic dynamics. This enlarged bloc represents a formidable economic force, with its members collectively accounting for a substantial portion of global GDP and a growing share of international trade. Consider the historical parallels. Just as empires rise and fall, so too do dominant currencies. The British pound once held sway before the US dollar ascended post-World War II. Could the BRICS nations be orchestrating a similar transition? Their primary motivation appears to be a desire for greater autonomy in international finance and trade, moving away from reliance on Western-dominated institutions and the US dollar. What are the strategies at play? BRICS nations are actively exploring mechanisms for increased trade settlement in their own currencies, potentially through a common payment system or increased bilateral agreements. This de-dollarization effort, while ambitious, faces considerable hurdles, including currency convertibility and the deep liquidity of the dollar in global markets. However, even a partial shift could have profound implications. For instance, if a significant portion of global oil trade, currently priced in dollars, were to move to alternative currencies, it could reduce demand for US dollars and potentially impact inflation and interest rates globally. This evolution in international finance presents both opportunities and challenges for consumers and investors alike, necessitating a keen awareness of these shifting global economic currents. Is the world's reserve currency about to change? For decades, the US dollar has held this dominant position, a cornerstone of global trade and finance. But as economic landscapes shift, so too do the dynamics of international currency. Consider the historical precedent. Empires rise and fall, and with them, their currencies. The British pound, once the undisputed global king, ceded its throne to the dollar after World War II. Now, a new bloc of nations, the BRICS countries, Brazil, Russia, India, China, and South Africa, are exploring alternatives. Their motivation is multifaceted: a desire for greater financial autonomy, a response to perceived geopolitical pressures, and an ambition to reshape the international economic order. What are their strategies for challenging dollar dominance? BRICS nations are actively promoting trade in their own currencies, developing new payment systems, and even discussing the creation of a common BRICS currency. For instance, China has been steadily increasing the international use of the yuan, encouraging its use in trade settlements and as a reserve currency for other nations. This push for de-dollarization, if successful, could have profound implications for the purchasing power of everyday consumers. Imagine a scenario where the dollar's global demand decreases. This could lead to a depreciation of the dollar, making imported goods more expensive for American consumers. Conversely, a stronger yuan or a new BRICS currency could increase the cost of goods traded in those currencies, impacting global prices. According to the International Monetary Fund, even a moderate shift away from dollar dominance could lead to significant exchange rate volatility, affecting everything from the price of gasoline at the pump to the cost of imported electronics. However, the path to replacing the dollar is fraught with challenges. The US dollar benefits from deep, liquid financial markets, a stable legal framework, and widespread trust. Replicating these advantages for any alternative currency will require sustained economic growth, robust institutional reforms, and broad international consensus, a monumental undertaking. Is the world's reserve currency about to change? For decades, the US dollar has held a dominant position, a cornerstone of global finance. But shifts are underway, and understanding them is crucial for navigating future investment landscapes. Consider historical precedents. The British pound once served as the world's primary reserve currency, a role it relinquished as global economic power gradually transitioned. This isn't an overnight event, but a slow, evolutionary process. Now, a growing alliance of nations, including Brazil, Russia, India, China, and South Africa, collectively known as BRICS, is actively exploring alternatives. Their stated motivations often center on reducing reliance on a single currency, mitigating perceived risks associated with U.S. monetary policy, and fostering greater financial autonomy. For instance, China has been steadily promoting the international use of its renminbi through various bilateral agreements. However, challenges abound. Establishing a new reserve currency requires immense trust, robust financial infrastructure, and widespread acceptance. Can these emerging economies build that global confidence? The path to de-dollarization, if it occurs, is likely to be complex and gradual, potentially leading to a more multipolar currency system. This could present both new opportunities for diversified investments abroad and new risks to consider for the average household's purchasing power. Is the world's reserve currency on the cusp of a significant shift? This question echoes historical precedents, most notably the gradual decline of the British pound sterling. For centuries, the sterling served as the preeminent global currency, a role now largely held by the US dollar. The transition from one dominant currency to another is rarely a sudden event. It's a complex multi-decade process. Consider the sterling's waning influence after World War II, a period marked by economic strain and the rise of a new global superpower. Now, the BRICS nations, Brazil, Russia, India, China, and South Africa, are actively exploring alternatives to dollar dominance. Their motivations are multifaceted, aiming for greater financial autonomy and resilience against external economic pressures. For instance, China, a major trading partner for many nations, seeks to internationalize the renminbi, reducing its reliance on dollar-denominated transactions. But what are the tangible steps being taken? BRICS members are exploring increased bilateral trade in their local currencies and developing alternative payment systems. A report by the International Monetary Fund, for example, highlighted the increasing trend of non-dollar trade settlements in certain emerging markets. These efforts, however, are not without considerable hurdles. Establishing trust and liquidity in new currency frameworks takes time and sustained commitment. Could these initiatives fundamentally alter the global financial landscape and, consequently, the purchasing power of everyday goods and the accessibility of investment opportunities? Is the world's reserve currency on the cusp of a significant shift? The global standing of a currency is intrinsically linked to the economic and military might of the nation or bloc it represents. Historically, periods of shifting geopolitical power have often heralded changes in currency dominance. Consider the British pound sterling. For over a century it reigned supreme, fueled by the vast British Empire's economic reach and naval power. However, as the 20th century unfolded, the United States' burgeoning industrial capacity and its decisive role in two world wars gradually propelled the U.S. dollar to the forefront. This wasn't an overnight transition, but a gradual process mirroring the transfer of global economic leadership. Now, attention turns to the BRICS nations, Brazil, Russia, India, China, and South Africa, and their aspirations to create a more multipolar financial system. Their strategy involves de-dollarization, aiming to reduce reliance on the U.S. dollar for international trade and finance. China, for instance, has been actively promoting the renminbi in cross-border transactions. According to the Bank for International Settlements 2022 Triennial Survey, the U.S. dollar still dominates over 80% of global forex trades, highlighting the scale of the challenge BRICS faces. What are the motivations behind this push? BRICS nations seek greater financial autonomy and insulation from U.S. monetary policy and sanctions. Yet, significant hurdles remain, including currency convertibility issues and the need for deep, liquid capital markets commensurate with global reserve status. Could a new currency, or a basket of currencies, emerge to rival the dollar? The implications for global trade, inflation, and investment portfolios could be profound. Is the world's reserve currency about to change? For decades, the U.S. dollar has held an unparalleled position, facilitating global trade and investment. However, a shift in this established order is being discussed, with emerging economic blocs exploring alternatives. Consider the historical precedent of currency dominance. Just as the British pound sterling ceded its global leadership to the U.S. dollar in the 20th century, could a similar transition be on the horizon? The BRICS nations, Brazil, Russia, India, China, and South Africa, are actively seeking to reduce their reliance on the dollar. Their motivations are multifaceted, stemming from concerns about U.S. monetary policy and a desire for greater economic sovereignty. What are the specific strategies being employed? BRICS members are promoting increased trade in their local currencies and exploring the development of a new common currency or payment system. For instance, China has been steadily increasing the international use of the yuan, and recent reports indicate a significant rise in bilateral trade settlements outside the dollar. But what are the hurdles to such a transition? The path to a multipolar currency system is fraught with challenges. Establishing trust and liquidity for new currency arrangements takes considerable time and effort. Furthermore, the U.S. dollar's deep integration into global financial markets, from commodity pricing to debt issuance, creates inertia that is difficult to overcome. The sheer scale of U.S. financial infrastructure, including its robust capital markets, provides a significant advantage. So what are the potential outcomes? One scenario involves continued, albeit potentially reduced, dollar dominance, alongside increased use of other major currencies like the euro and yuan. Another, more dramatic possibility is a truly multipolar landscape where several currencies share reserve status. The likelihood of these scenarios depends on a complex interplay of geopolitical events, economic policies, and the collective actions of nations. Is the world's reserve currency about to change? This question looms large as economic power continues to shift. Historically, currency dominance has ebbed and flowed, much like the fortunes of empires. Consider the British pound sterling, which held sway for much of the 19th and early 20th centuries before the U.S. dollar ascended. Now the BRICS nations, Brazil, Russia, India, China, and South Africa, are actively seeking to reduce their reliance on the US dollar for international trade and finance. Their motivations are multifaceted, aiming for greater economic sovereignty and insulation from US monetary policy. For instance, China, the world's second-largest economy, has been steadily increasing the international use of its renminbi. However, this transition presents significant challenges. Establishing a new reserve currency requires immense trust, deep and liquid financial markets, and widespread acceptance. The US dollar benefits from decades of established infrastructure and global confidence. Furthermore, de-dollarization efforts face hurdles like capital controls and varying economic stability among BRICS members. The implications for global commerce and individual finances could be substantial. A diversified reserve currency landscape might offer more stability, but it could also introduce new volatilities. For businesses, it could mean navigating more complex currency exchange mechanisms. For individuals, purchasing power and investment strategies might need recalibration in response to these evolving global dynamics.